Another key thing to look at is compression. It's very important. It's basically looking at absorbed orders and consumed orders. And I have examples on the next slide. So in the bullish case, the bullish compression zone is where supply is being absorbed. So imagine price is falling while spiking north. Basically, it's falling to find a key demand zone so it can reverse. But while it's doing that, it's also spiking north. And when it's spiking north, that's doing pretty much two things. It's testing lower time frame supply zones to give it enough like selling momentum so it can get to that key demand zone on a higher time frame to reverse price, reverse the trend. And also while it's spiking north, it's consuming all the supply to clear upside path. It's consuming the supply above price. That way, whenever price does hit that high time frame key demand zone, it has basically a clear path to move to the upside with no resistance stopping it. It's opposite for the bearish compression zone. It's where demand is being absorbed. Its price is rising while spiking south. So basically, it's rising to find a key high time frame supply zone to reverse the trend. Or while it's rising, it's also spiking south, which is testing demand so it can get enough buys and bullish momentum to reach up to that key supply zone. And also while it's spiking south, it's consuming demand. So whenever it does hit that key supply zone, it is free to move lower with little to no support that will hold it up. So let's start off at the beginning, right? Here's the origin of a huge impulse move, breaks market structure. So this is a demand zone right here. So price is making higher lows. Here's a key high time frame supply zone. So it's pretty much consuming buyers or demand all the way up to the supply zone. You notice here's a key, here's a demand zone, consumes it right here. Here's a new demand zone, consumes it right here, a new demand zone. You see these are just the origin of these impulse moves, consumes it right here and then goes higher. So that's consuming all of the demand. There's no fresh demand left. So once price hits this high time frame supply zone, it pretty much is able to drop and without anything holding it up. So you can see right here I have prices also consuming buyers here while rising higher lows towards high time frame supply. Once the buyers have been consumed, price can fall through with no support stopping it. This explains the violent drop to the right as there is no demand left to hold it up. So you can see once price tapped into this high time frame supply zone, it is violent drop, and basically look where it landed, or look where it finished off at. You can see this is the very beginning of this whole compression zone, and it basically took out that compression zone. And so the same thing on lower time frame was happening right here, but it was consuming supply, so buyers could freely move higher. So you can see this example would have been better on a lower time frame for this area, but you know, I had it all on one chart. So here's a supply zone, the origin of a sell-off, right? Price retest it, so there's no supply left right here. It goes a little bit lower, comes back up. Here's a origin of a sell-off, price comes back up, retests this supply zone, consumes that supply. There's no supply left. Here's the origin of a sell-off, price comes back up, retests the supply zone, consumes the supply. There's no supply left here, and breaks down, forms a supply zone, goes lower, price retests it, consumes the supply zone. There's no more supply. So what does price do? It's able to shoot up and break through this compression. You can see it kind of paused right here and went higher, but basically took out this whole compression zone right here because there was no supply. I wrote down, notice how price is consuming sellers. Once the sellers have been consumed, price can freely move up with no resistance. So the same thing happened right here. See, like I said, this would have been a lot better on lower time frame because these moves don't look like much, but here's a origin of a sell-off, price retest it and goes lower. Here's an origin of a sell-off, price retest it right here and goes lower. So there's no supply left. Price is able to shoot up and pump basically with nothing stopping it. So same thing happened right here. A low time frame supply zone, price drop, retest it, takes out that and consumes that supply, price goes, forms another supply zone, drops, price retest it, consumes that supply. So there's no supply left to this whole zone. There's no fresh supply. Price is able to just shoot up and break through it all. Finally get up to this high time frame supply. Once it does, like I said, it consolidates for a bit and drops very violently and takes out this whole compression zone because there is no fresh demand or buyers to hold up price. So I hope you can understand that, because compression and just absorption and knowing when all of the buyers or sellers or demand and supply is consumed at a zone is very useful, because I mean, in this example, it's just perfect. You can see once supply was consumed, price is able to pump through it all. If you're trading low time frame, this could be very well for scalping, and once all this demand was consumed, price was able to just shoot past it. So let's go ahead and look at the next compression example. So here we have compression up to another key high time frame supply zone, but you can see there's really no demand zones here. Taps into this area right here, gets a little bit higher, consume. You can see this wick taps into this zone just a little bit, goes higher, breaks down, price consolidates a little bit. This is a down candle. This would have been a demand zone. Not a very strong demand zone, give it that, but low time frame, it probably is a demand zone because it's the origin of this small little impulse. Price consolidates, wicks down, takes out these buyers basically. You'll notice like all of these wicks are pushing down and buyers are getting consumed. It's pushing it back up. So it's taking out a lot of buyers every time it wicks down and pushes back up. Wicks down, pushes back up. Wicks down here, pushes back up. But price absorbs demand on the way up and clears the way down. So price consolidates. This is just choppiness really. it does finally pump. You can see this is a demand zone. Pushed it higher on a retest, perfectly into the zone, consumes it. Price goes a little bit higher, gets enough bullish momentum, taps into that high time frame supply zone, and then with no demand left, price is free to fall through the compression with little to no support stopping it. And you can see this is the origin of that whole compression zone. Price jumps straight to it, takes it out, and then consolidates, does whatever it does. But notice how on both of these examples, the origin of the compression zone, price just goes and fills that whole move in. Same thing here. Origin of compression, drop basically takes out the whole compression zone.